Hello, everyone, and thank you for joining us today. My name is Julie Muhn. I'm Senior Research Analyst with Finovate, and we are here at FinovateFall in New York City. Today, I'm joined by Beth Haddock, Global Head of Policy and Corporate Director at Stablecoin Standard, and we are going to be talking about stablecoins, the possible threat to the US dollar, how banks should be using stablecoins, how fintechs need to be involved in stablecoins, and more. So stay tuned. Beth, thank you so much for joining us today.
Thanks for having me.
Yeah, so let's kick things off. Give us an overview of the current stablecoin landscape and tell us where you see it heading.
Sure. Well, it feels like we're at a pivotal moment. Some are even calling it the golden age of convergence of crypto and banking and traditional finance. So the way that I see the world right now is at this very important pivotal moment where either the blockchain and the Web3 innovators are going to deliver on that promise, or because of gravity and all of this competition and convergence, we end up with, traditional finance, but on the blockchain. So my prediction, and I vote, which is also a hope, and I'm an optimist, is that we will see the innovation and we are going to see increased transparency. We're going to be able to see a new paradigm for finance where there's more access. We're able to fight fraud, but we also are able to really protect individuals' privacy so that it's not the paradigm where we live with some of the risks that we have today because we don't have the benefit of the blockchain technology.
Yeah, interesting. So I want to get your opinion on something. I gave a talk at Finovate Spring earlier this year on kind of the future of banking in 2035 and what it might look like in 2035. And one thing that I mentioned was that in 2035, end consumers won't really know the difference between DeFi and TradFi because that line is going to be blurred. Do you agree with that? Is that something that you envision happening ever?
I hope you're right.
Okay.
I hope you're right. I do think between centralized finance, CeFi, traditional finance, TradeFi, and DeFi, decentralized finance, that there is a very healthy competition. I do believe you probably are going to know the difference. Like today, if you know the difference between purchasing a mutual fund and investing in a private fund or a hedge fund,
Yeah.
which operates under exemptions and exclusions, I do think we'll see that complexity. I love your sort of moonshot because that to me means that you and I and all the other digital natives, Gen Z and the next generation, they're really going to own their own data and it will be decentralized. So the volatility and the instability and different economies and governments won't be as impactful.
Yeah,
So
interesting.
I hope you're right.
Yeah, I love that take on it too. So thank you for sharing that.
Sure.
So a lot of times what we hear, the criticism of stablecoins is that perhaps it will unseat the strength of the US dollar. Can you talk to that a little bit and talk about how you envision the impact of stablecoins will have on the strength of the US dollar?
Sure. I totally understand the concern because anything that's new, especially if one doesn't understand all the risks, there's a lot of fear and misconception. And that type of fear, I feel like, comes from a misunderstanding of what stable coins are, but a second misunderstanding about the power of the consumer demand to have their own trusted way in which they do commerce.
Yeah.
So when you think of consumers, do they truly trust centralized institutions in the way in which the trust used to be there? I'd offer that no, since 2008, the trust really isn't there. So if you want to build the trust again and you want to have, I think of stablecoins and the US dollar as increasing the trust, increasing the protection for our national security, and in some respects, really sort of exporting our ideals about democratic capitalism and about having this all access, whether you're in the US or you're in Buenos Aires or you're somewhere else. If you can get paid in US dollars and not have to deal with the volatility of your local currency,
Yeah.
that is a perfect sort of outsourcing of American ideals. So I think it's going to strengthen the trust in America, strengthen the US dollar, and then also help sort of even out the volatility that's part of some of the world's real challenges right now.
Yeah, very interesting. Okay, that's a good outlook on that. So the Genius Act, that's going to be finalized in January 2026. And one of the stipulations it says is that people who hold stablecoins are not able to earn yield on that stablecoin. However, we've already seen some workarounds. For example, Coinbase is paying out quote unquote rewards for people holding stablecoins. Can you talk to that? Are those strategies going to be more and more commonplace, those types of workarounds to pay out yield?
Yeah, so I think the current state right now is first movers are moving because the Genius Act is not implemented. And we do have an 18-month implementation timeframe. And they're still going to be implementing rules and regulations. So in the meanwhile, if you have good regulatory strategy, you can build a foundation, but make it agile. So this way, as guidance comes out, you can adjust. But as I mentioned sort of before we started the interview, I believe American ingenuity, which we have seen pervasively through finance, will continue. And so that means that when you look at the definition of payment stablecoin in the Genius Act, it doesn't cover everything. So if carefully and under the rubric of responsible innovation, you can look to responsible exclusions and exemptions. There's plenty of interesting, creative, but thoughtful work to be done. So I would predict that you are seeing it now because Genius Act isn't in place.
Yeah.
But also there's valid ways to work outside of Genius Act right now.
Interesting. Yeah. So maintaining that agility, I guess, is key to move along with the regulations as well. Great. So we hear a lot, not only about stablecoins, which you're going to be talking in an hour on stage about, but also tokenized deposits. Can you clear up the differences between those two?
Yeah, so when I think of bank deposits, I think of FDIC insurance. I think of my bank rehypothecating and using my money. I also think of my bank using my money, but not necessarily giving me interest.
Yeah.
And then on the other side, and potentially some of those attributes are why the stablecoin growth has been so high, is stablecoins are not deposits. It's almost like sort of calling, your bank account a poker chip. Like it's like not to be compared from where I sit. From where I sit, that's a misconception because the stablecoins are meant to be infrastructure and rails. They're not meant to be deposits. And when you look at the Genius Act as well as laws in Europe and Asia, you have to hold those reserves. You can't use them.
Oh, interesting.
You cannot use them the way banks can use your deposits. So it's a little bit of an irony there. You may not have the FDIC insurance, but you do, if you're operating under the Genius Act, you have to have the reserves and you can't reuse them.
Yeah, so that could be a real pain point then for banks looking into tokenized deposits.
Yeah.
Yes. Okay. Well, speaking of banks, and let's look at specifically smaller banks, so smaller financial institutions, how can they effectively compete in this space when they're just trying to, maintain and perhaps also launch their AI strategy or figure out what AI is? What are your recommendations to them?
Sure. I do, as you can hear, I do believe that stable coins are here. They're not just going to be foundational, but part of the future of finance. They will grow even more and be the rails for all of the blockchain technologies. So I would encourage the smaller or more regional players to really do their homework, understand the product, really sort of be curious. And if you hear a misconception, we just covered one or two of them in this brief interview. Once you get through that and you understand what you're doing, dive right in, because I do think it's going to grow. I also think we've already seen the trend where banks are getting engaged and they're going a little bit deeper with stablecoins, but they're doing it in a way that they're comfortable with, which is through outsourcing, whether custody services or other different services. So one doesn't have to necessarily be an issuer.
Yeah. Yeah, yeah, those services are already there. And like you said, stablecoins aren't going away, so there's no use in burying your head in the sand.
Yeah.
Right. Well, we have time for one last question. What's one piece of advice that you would give banks and fintechs to stay ahead of stablecoin adoption in the next 6 to 12 months?
Yeah, so I'm gonna sort of do my own personal moonshot, which is that where you said 2035 we were going to be. I would love for banks to think in that way. And it is an
Mm,
upside down paradigm
yeah.
where you really would have to have the same interests be consumers and the financial institutions.
Yeah.
So if you think about data, I would say that you and I get to have our portable data instead of it being housed centrally, and then we can protect it from breaches
Hmm.
and we can have the transparency and all the interests align as the products grow. I think the consumer demand really is to have trust in the banks,
Yeah.
and you have to really rethink the way in which you're offering products in order to gain that trust.
Yes. Trust is huge and always has been. Very good. We'll end on that note. Beth,
Thank
thank you
you.
so much for your time. This was really interesting. Appreciate it.
Great.
And thank you so much for joining us as well. We'll catch you next time.